What's going on, YouTube? This is Dave's Daily Trades, where I bring you daily AMC technical analysis, price predictions, and of course, the latest and greatest news. In today's episode, we're going to be taking a look and discussing the man, the myth, the legend, Charles Payne, buying into AMC and discussing it on Twitter. We're also going to take a look into China's property problem and how this directly relates to AMC. We're also going to be breaking down the options flow with unusual whales. And lastly, guys, discussing, in my opinion, the crappy article that was released by the Fed, discussing how retail is the big risk for the overall markets. But without further ado, we're going to roll right into the intro and then hop into the technical analysis. And we're back. All right, guys, a totally normal trading day for AMC. I'm just kidding about that. It was a bunch of crap, in my opinion. So, of course, you all know yesterday we beat on EPS and we beat on earnings. And in my opinion, had the greatest earnings call that I've ever witnessed for AMC this year. And what happens? Well, we drop 11.38%. And I know a lot of people were disappointed, especially because we were at the top of that flag-shaped pattern and just about to break out. Now, of course, this did erase a few days worth of gains, but it's totally fine, and we're going to jump into exactly why that is. Now, usually I do discuss and review the 1-minute chart, but today's price action, in my opinion, was so irrelevant, I'm not even going to spend time looking at this or even wasting any breath on this. Now, guys, what I have here is the 1-hour chart, and I do have the Fibonacci retracement up, especially since we did have this recent low over here at just about $34.56. This was on 10/29, and if we trace this to our recent high, this does come, and we're actually going to bring this down a little bit here, right to this point here, because this giant wick up to 47.50 was actually an after hours. Now, what we look like here is we are floating just below the 50% retracement, which is totally fine, guys. Now, of course, after every retracement that we see, I always, oh my God, come on. This is why Webull, don't use Webull for charting. Use TradingView. Anyways, we'll lock it there so we don't have this issue. But as I was saying, we are right below that 50% retracement. And really, after every time we do have this run up and then a cool off, I will always use the Fibonacci retracement to really get a feel for where we currently stand and what's going on. Now, of course, guys, things are a little disappointing, I have to say, but it is totally fine. And the reason being is, well, look at this. Well, we're right below this 50% retracement. And as you guys all know, or should know, the 61.8% is the quote-unquote golden pocket. That is typically where AMC likes to bounce and run. Now, don't get me wrong. This level right here would be just about at $38.96. I wouldn't be surprised coming down here just about at like $38 to the dot. That would really be my point of the low is in, or the recent low is in, and we're going to make that next retest at this $44, $45 area. And that's what I'm going to predict to play out over the next couple of days. And of course, once we look at the 1-day chart, things will all start to tie in together because it's all based on what happens in early May and where we currently stand, in my opinion at least. Now, looking down at the technicals, well, of course, this last run got the MACD high and the RSI high, so cooling off a little bit is really not the worst case scenario here. I mean, we do have the MACD looking like it's cooling off here and looking for a crossover on the 1-hour chart. Now, if we jump down to the RSI, well, look at the RSI. We had almost a perfect bounce at that 30 region, and we are starting to make moves up. Now, what I expect for tomorrow, I do expect tomorrow we are going to put the low in. Somewhere around this $39 to $38 range, that would be really my guess, and we'll actually just draw it out. So I do believe we're going to come down somewhere in this range, retest and claim that 39 as support, and then late this week or early next week, start to make moves around this area. And if we do have that successful breakout, well, then it's off to the races, guys, and you know exactly what's going to happen. But before we do move into any other items on today's agenda, I do want to point out a few things. So one thing that I believe was first posted on Twitter, and guys, apologies if I don't shout out the correct person. I'm just at work sometimes. I see some things that actually make sense, and then I research after once I get home. But anyways, what the interesting thing that's happening here is it seems to be that our 3 bottoms and 3 consecutive higher lows that we see before the massive runs. So if we look back here just about to February of 2021, I know, some time ago, we did have this low over here. Now what happens? Well, we start to move, and then we go 413, so early April, we start to put in another low. Now the last low comes a little higher, just a little higher, and that is the low right before our run-up. Now, I do want to direct you right to kind of present date in this current flag that we are in right now. So this first low comes in over here on 8-9, or just about in this region here. And then we have our second that came in on 10-27. And personally, this cool off right here seems to me to be that last dip before we rip. Now, of course, when I say that, guys, I don't want you to think that, oh, this dip is over. Let's take some weekly call options because Dave's Daily Trade said we're only going up from here. No, that's not what I mean. What I'm saying by this is this cool-off period, which could last anywhere from 1 to 3 days or even more, in my opinion, maybe 4 days, that, once we do bottom out, will be the low. And like I said, I do expect it to be somewhere around this region over here, right in the middle between the 78.6 and that 61.8% retracement level. And that is my guess, at least, of what I think is going to happen based on historical events with AMC. But guys, I think I've covered enough with the charts, so we're going to just jump into some information that's going on for AMC. Now, of course, guys, Charles Payne, he is truly the man, the myth, the legend, one individual on Main Street, in the media at least, who has really, in my opinion, had our back through all of this. I mean, bringing on Trey's Trades, Matt Kohrs, and various other AMC, I guess, influencers, you can call them, to get our voice and our perspective out so people don't think we're actually these stupid apes who are just about to lose a shit ton of money. I don't know what to call it, but this guy is the man. Anyways, came out today, well, he has actually officially announced that he has bought AMC and GameStop today, which is just absolutely huge, especially from this guy. I love to see it. Now, I do want to jump over to the property problems that are going on in the Chinese markets. So, of course, guys, to sum it up real quick, it was an over-leveraged real estate market where banks and institutions were lending out to these firms, and they were building more properties than people actually needed. And I think the video is pretty much viral at this point, but they were knocking down like 8 skyscrapers all in the same day, all at the same time. It was absolutely crazy. I've never seen anything like that. And really, this kind of throws me back to the 2008 financial crisis and what kind of played out through that. Now, the biggest thing is, yeah, of course, this is going on in China, and this is an AMC video, so how the hell does this relate? Well, there is a lot of U.S. exposure to this Chinese real estate market. And if you look at the GDP for China, it is mostly consistent of the real estate market. So you have a giant pullback in the real estate market for China. Well, of course, U.S. investors who diversify, invest in China, they're going to get hurt. You're going to have global markets get hurt. And that's really when the fear, uncertainty, and doubt really just spread like wildfire. And you may have some people pulling on positions and getting out of their long positions. Now, luckily for AMC, AMC has that, and GM8 and other meme stocks as well, have that high negative beta. So, of course, number one here, well, with this fear, uncertainty, doubt that is being caused by this issue in China, well, people are going to move into those negative beta plays to diversify and to really just hedge against potential risk in the overall market. And now, two, well, if there is a massive move within equity markets because of this, I'm not saying there will be. Well, that, of course, plays into the risk, which then plays into margin, which then means it is very difficult to maintain those very risky options and derivative plays and even short positions that are out there. And of course, we all know that the derivative market in the United States economy is just absolutely through the roof. So I'm not saying that this is the catalyst that could start it all, but of course, it could be just one domino that falls that does set a lot of other things off. All right, so I do want to jump into the options flow. Of course, guys, we are using Unusual Whales. I do have a discount code for 5%. Just use code Dave. This, by far, guys, my favorite tool to use. Why is this? Well, look at what happened today. Of course, AMC did have a little bit of a sell-off. And I'm not going to lie, it was 11%. So a little bit. Anyways, look at this, guys. What's coming in today, we see all of these calls being sold. We're talking about a decent premium for all of these plays. And it really just showed how bearish the whales were for AMC. So this really gave me personally a little bit of a warning sign that today wasn't going to be so pretty. But on the flip side, because there isn't really a lot to talk about besides bearish stuff, and I know you guys don't really want to hear bearish things, but the biggest thing, guys, is if we do look at the flow levels, well, you can see that the bears were targeting that $40 level and really trying to push it underneath. Of course, they were successful, but this is only for today, guys. Tomorrow's a different day. And of course, I know a lot of individuals were absolutely buying that dip today. And of course, all the world to you on that. If we do look at the number of calls versus puts, some interesting things going on here. Calls heavily outweighed the puts. 66% for the calls and 34% for the puts. Now, of course, guys, I do believe tomorrow is going to be some type of correction day, as I said in the earlier technical analysis. But of course, we'll see what happens. It gives good time for technicals to cool off, for people to buy the dips, and for TA to be done and DD to see where we are headed. And last but not least, guys, I do want to just re-bring up the real, how do I even put this? The terrible article that came out with the Federal Reserve. And, you know, the thing that this really mentioned was that retail, these new investors hopping in, are causing significant risk to the markets. And, you know, I really think back to The Big Short, the movie about the 2008 financial crisis. And one thing that stuck out at the end is all of this dirt was kind of uncovered through various individuals in this movie. And we all know who the bad guys were in this scenario. But at the end of the day, they turned it around and blamed the immigrants, the poor, retail, whoever they want to blame, besides actually taking action and really just taking that blame from themselves. I mean, of course, we're talking about Wall Street, a bunch of crooks. But one really interesting point here is, of course, they're going to blame it on us. Of course they are. And the reason being is they absolutely hate us. And why is that? Well, it's because we made their jobs look incredibly easy. I mean, a lot of these individuals go into school for finance, go to top tier schools. They then get internships at top institutions. They get their master's degree in all of this schooling. And what this has showed, and I think why this is truly such a big battle, is because it comes down to dignity. I mean, they put so much money, time, and effort to really understand the true metrics and technicals through investing. But what we've done and what we've accomplished in the past 9 or 10-ish months is you don't need any of that shit. I mean, we've been able to teach each other, and everyone's learning from each other through this community, which is absolutely amazing. And I mean, just going on Twitter and Reddit in January compared to now, it is unbelievable. I mean, you guys are truly learning and comprehending and understanding so much about the markets that these guys on Wall Street are pissed off because they know it's not this easy. But we are truly, with the power of the internet, making it easy where individuals are actually quitting their jobs, staying home, in day trading and swing trading for more money than they're making annually at their jobs right now. So, of course, guys, they're going to be pissed off. But anyways, that's all that I have for today's video. Be sure to hit that like button, subscribe for more content, and peace out.